Okay. Where are we? So this is how we calculate the partial reinvestment relief. A over B times C, where A is the amount used to purchase, construct a new business property. B is proceeds from the self-owned business property. C is potential CGT on the old business property. So the calculations are just the same as what we do. Want to just see if we have an example, but it's just the same. Okay, this is okay. Okay, now let's cover this one is important. What is the time now? Okay. Now let's cover sale of a movable property under suspensive condition. This is governed by Section 18 and Section 19. Whilst the ownership of an asset passes upon payment of the full purchase price, for tax purposes, the full purchase price is deemed to accrue on the date of contract. Whilst the ownership of an asset passes upon payment of the full purchase price, for tax purposes, the full purchase price is deemed to accrue on the date of contract. Okay. So what we are saying here, in a nutshell, we are saying, let's say I sell my laptop to Shadrach for $1,000 US. Uh, and Shadrach, the conditions will be saying, okay, you only get ownership or the title deeds of for this computer or for this laptop when you pay the whole amount. Maybe Shadrach is paying 100 for 10 months. So I say you only get ownership of this laptop upon the payment of the last amount. That means on the 10th month. But Zimra will say, the whole 1,000 accrued to you on the first month. Okay. So when we say suspensive sale conditions, we are saying ownership will only pass upon payment of the last installment. But Zimra will say no, the whole 1,000 accrued to you, uh, accrued to you on the date of purchase or the contract date, that is on the first month. So that means they will have to tax you in the first month. Everything, the 100,000. But they are not that evil. They will just say, we can also grant you what you call a suspensive sale allowance. So the only problem is how do we calculate a suspensive sale allowance? So number two is saying, as a concession, the taxpayer will be taxable only on that part of the sale price which accrues to him in terms of the sale agreement. This is affected by giving the taxpayer Section 18 allowance, a deduction on amounts not yet due at the year end. How do we calculate the allowance? The suspensive sale allowance in terms of Section 18 is determined by the formula A over B times C. Where A, this one you have to take it down if you are not writing anything. Where A is the portion of the process not yet due at the year end in terms of the sale agreement. So A just to be your data outstanding balance at year end. Then number two, it will be the total sale process. Number C, it will be the total uh, uh, capital gain accrued on the sale. So this is how you calculate it. You say A over B multiplied by C. It's again a relief sort of. You allow this allowance after calculating your capital gain, then you put the suspensive So allowance, and this is how we calculate it. Section 18 allow in 1 year is recouped in the following year as income. That is computed capital gain relating to amount not yet due at year end is allowed as deduction but added back the following year in the fresh allowance can be made. Okay, I just hope that we have an example here. No, that is not very good. Okay. La, 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 la. To see if I can have a good example. Good example, good example, good example, good example, good example, good example. Because that one needs an example. I think that will do. Where can I get an example? A good example, a good example. Why is it not loading? I don't know. I think I once covered suspensive allowance in one of my videos. Just that I don't have a good example here. Ah, okay. Let me create one from scratch. Okay. I do have a good example. Let me look for the example. I do have it. I now remember. I now remember. Taxation, assignment questions, assignment number 3. I think that was capital gains, isn't it? The assignment that were given, we once wrote it as a test. Was exactly the same. Secondary form of index planning opportunities. Okay. I don't think we have an example here. Okay. Let's say uh, a specified asset or a building was sold for 5 million. The date was 1 July 2021. 1 July 2021. Then 2 million deposits. 2 million deposit. The balance payable in man, how many months do we have here? In 48 equal monthly installments. Let's calculate CGT payable for 2021, 2022, and 2023. Yeah, this one is a perfect example. Okay. Let's say the cost of that asset, the cost of the asset was 1 million. Improvements, $1 million again. It was acquired in on 1 January 2020. The improvements were done on 1 July 2020. Okay, so this one is a typical exam question. So what would you do? So we start with 2021. Okay. Where am I? 2021. So we start with our gross capital amount. It's 50,000, isn't that will be our gross capital amount. Then you say less recoupment, and then less exemptions. What I'm sure is we don't have exemptions, but recoupment, we say capital allowance is previously granted on the asset. So we have two capital allowances here. We have on the cost. So the cost was 1 million, then you multiply it by, we say the 1 million multiplied by, this was a building, let's say commercial building. So we were claiming ordinary wear and tear 2.5% for how many years? We acquired it in 2020 and sold in 2021. So we know that there are no capital allowances in the year of disposal. So just multiply by 1 year. So that will be our recoupment. Okay. So we multiply it by -1 to make it negative. Then we say this one plus this one plus this one. Okay. Then we say less deductions. What deduction do we have for the costs of the assets, which is 1 million? We have inflation allowance on the cost at 2.5%. So we are going to say the cost multiplied by 2.5%, multiplied by many years, 2020, 2021, multiplied by 2 years. Then we have improvements. Improvements again, we 1 million. What about inflation allowance on the improvements? Again, it will be the 1 million multiplied by 2.5%, multiplied by 2 years. Then we have less capital allowances. Capital allowances, we say it will be just equivalent to this. So it will also be a negative because it will reduce our deductions. Then do we have any selling expenses? No. Okay. So we're going to say sum of all this. It was supposed to be 5 million, not 450 million. Okay. So this will be our capital gain, like this. Okay. So now let's suspensive sell allowance. This one is working number 2. So we come here and say working number 2, suspensive sell allowance. Okay. So the suspensive sell allowance, uh, we have 3 things that we need. What are those things? We need A, and our A is the portion of process not yet due. So that is our data. So now we want to calculate A. How are we going to calculate A? We want to calculate the amount, the total amount that were paid in 2021. So it will be the deposit. How much is the deposit? Is it 2 million? Okay. And also the installments. So how do we calculate the installments? Obviously, the installments, we are saying the total amount was this one, and this guy deposited 2 million. If we divide this by 48 months, because we say this is going to be paid over a 48 monthly period, and then we multiply it by how many months do we have? We have July itself, August, September, October, November, December, multiply 6 months. So that will be the installments in the total amount paid in 2021. Then we calculate the total, this one plus this one. That means in 2021 we paid this total. Okay. We paid this total, and the so our data balance will be equal to the 5 million, which is the total amount due minus this one that was paid. So that means end of 2021, this is the amount that we have. This is the balance, the data balance that we have, and that is our A, because here we said A is the portion of the process not yet due at the end of the year. So this 2.6 is not yet due. Okay. What about our B? Our B, we said B is total sale process. Sale process is how much? Is 5 million. What about our C? Our C, we said is total capital gain accrued on the sale. Okay, so our C is this. That is the capital gain that is accruing on the sale. So then our formula say A over B, A over B multiplied by C. So this will be the suspensive sale allowance. Okay, then we can also multiply this by -1 to make it negative. Then we do our calculations. We then say this one minus plus this one. Yeah, something else. This one plus this one. Okay. So capital gain after allowance. Then CGT at 20% and CGT at 10% will be this one multiplied by 20%. Okay, so that will be 21. What about 2022? 2022. What does the Act says now in 2022? We go back to our beloved slide. Okay, so the uh, we go to number 5. He's saying section 18 allowance, the allowance that we calculated in 2021, that is what they are calling Section 18 allowance. In 1 year, which is 2021, is recouped in the following year as income. So that allowance that were allowed in 2021 will be gross income in 2022. So what does it mean? So in 2022, we are going to say recoupment. We put this allowance, and we know that recoupment is like uh, income, but this one is not income. Is okay. So we say recoupment of the suspensive sale allowance in 2021. Okay. Then we say less suspensive sale allowance in 2022. The formula will not change. We say formula is A is now A changes. In this case, our A, this was 2021, 2022, it will be the 5,000, the 5 million. We subtract the total that was paid in 2020. We subtract the total that would have been paid in 2022. So it will be, the total will be this one minus uh, the deposit divided by 48 months multiplied by 12 months. So this will be the balance in 2022. Let me just 2022. Okay. So our suspense allowance will not change. It's just this. Then you divide it by B. Then you multiply it by C. B and C will not change. Multiply by -1. So then we say this plus this. That will be the capital gain in 2022. And CGT at 20%, it will be this one multiplied by 20%. Okay. Okay. So you do the same thing for 2023, but this is the thought process.